Joining me now is TJM Institutional Services Director, James Iuorio. James, good to see you. Thank you so much for joining us. What do you make of this sell-off in crypto? I mean, traders are betting now that there's actually more downside coming, even targeting the $80,000 level on Bitcoin, steepening this sell-off heading into next year. What do you see?
So there's a couple different elements to the story which I think are fascinating. So we look over the last year and a half. Prior to that, the story was institutional adoption and all the, the diamond hand hodlers that had Bitcoin and were never going to sell it. Well, what's happened in the last year and a half, maybe 2 years, is that we've launched all these ETFs. We've launched these futures contracts too. It kind of created structural vulnerabilities within the crypto space because so many different new participants started to get into the market. Now consider $100 billion almost in open interest in futures contracts just in Bitcoin. That's a lot of positions that are much, much different than these true believers from the beginning. So that kind of opened the trapdoors, particularly on October 29th, when the chairman said that perhaps we're not getting the cut that we think we're getting. Hopefully we'll circle back to that in a bit because I think we are getting the cut. But all of a sudden, boom, then the trapdoor opens. Now, what was the most fascinating is that Bitcoin seemed to drag the NASDAQ with it. That's kind of unusual. Prior to that, the NASDAQ would move and then Bitcoin would follow. To me, it was a signal to the market of risk off. And you mentioned that 80,000 level. I think that's the key level in Bitcoin. Again, by the way, they said a moderate decline. Bitcoin moves wildly. So if it has a 30% move, if you're a Bitcoin investor, you have to get used to those kind of things.
So what about the Fed? Are investors repricing the odds of a Fed cut now?
Yeah, yes. Before the meeting on October 29th, it was over 90% that the Fed was going to ease. I heard the same words that everybody else did, and it sounded to me just like the data dependent, no path is set in stone. It sounded like the same words as always, and yet the market has taken to believe that means no cut, and now it's at about 45% for a 25 basis point ease at the meeting. So somebody's wrong. Either the market's wrong or I'm wrong. And by the way, when I disagree with the market, I usually think that the market's right. I don't see what the reason is yet. Just yesterday, both Jefferson and Waller doesn't matter as much because he's an Uber dove, but said about the problems within the labor market. To me, it seems like their focus had shifted to the labor market away from inflation, and I thought that was a reasonable pivot for them. And I still think they're going to ease as long as the market doesn't start pricing in 0% chance of ease. And so I think they're going to get out there and start talking about eases soon.
So what do you think is really the pressure here? Because markets are lower, it's risk off. We got futures indicating another 200-point sell-off in the Dow Industrials this morning. All three major indices ended lower yesterday. The Dow down better than 550 points at the close. This morning down another 225. Now, NVIDIA is reporting after the close tomorrow night. It had a filing showing that billionaire Peter Thiel has dumped its entire stake in NVIDIA in the third quarter. So we're waiting on those earnings, but maybe that's what part of this pressure is putting the focus on data center sales. Analysts expecting another stellar quarter in terms of earnings and revenue, even as these AI bubble fears are building. And James, and I asked Jensen Huang what he expects in terms of a, return on investment, given the trillions of dollars he's expecting. And he thinks that the money's going to keep on flowing.
So to put that in perspective, Polymarket has NVIDIA beating at 92%. Everyone thinks NVIDIA is going to beat. But yes, NVIDIA is the bell cow for the whole AI trade. I am in the camp that there was some sort of bubble inflating. And to put that in perspective, the NASDAQ from the highs, the 200-day moving average was almost 16% below the highs. To me, that's a market that's run far and fast, and I think it was vulnerable for a pullback. Now, even in that time, NVIDIA had a 15% pullback, and nobody seemed to notice. So here's what I think is the most important thing for the earnings that come out Wednesday is if NVIDIA beats, and it's a solid beat, and the market turns around and hits that name, that $5 trillion name that's 8% of the S&P right now, I think it could be the indication that the bubble is popping. And by the way, I don't mean to be over dramatic about the bubble popping thing. I think we were in the early stages of a bubble creation, and I think it's probably good for the market overall to have a bit of a pullback. And again, like I said, 15%, 16% is 200-day moving average. That's probably a place that I'll start looking to pick up names, not sell.
All right, we'll leave it there. James, great to see you. Thank you. James Iuorio joining us on Markets this morning.